Here's the top 10 things to know about penny stocks. Number 10. A lot of penny stocks can have extreme amounts of volatility. And what I mean by that is just in a few short months, you can see stocks go as high as $1.5767 to as low as 38 cents. Because of the lack of supply in shares and the tighter share structures that many of these companies can have, as well as increased dilution from other things that we'll explain later in this video, many stocks can go up and go down in a very short amount of time. So consider that penny stocks, part of the risk is that there is extreme amounts of volatility. And in this example, you see a stock that has gone as high as $1.67 to as low as 38 cents in just a matter of months. Likewise, you've also seen a stock that's gone from lows of 38 cents to over $1 in just a few weeks. So volatility can help and harm depending on what side of it you're on. Number 9. We're looking at forms of toxic financing with many of these companies. And what I mean by that is because of the way these companies are listed, because they are in the startup phases, many banks won't end up funding them with traditional means. So they'll go to other lenders for alternative financing methods that will end up helping the company financially, but could potentially harm the market in the long term. So many of these companies, for example, this company here, will do funding well below the market price. And what that does is attract investors that are interested in deals like this. When it comes time for them to recoup their capital, which is recouping certain forms of debt, these conversions can end up hurting the market simply because there's not enough demand to meet the supply. There aren't enough buyers to buy the shares that the sellers are selling because it's at a discount and because it can convert so many shares. So be wary of convertible notes, notes payable, convertible debentures, all different terms that will be used on a company's financial statements. Which leads me to number 8. Many companies, mainly on the OTC pink sheet market, will lack the proper reporting that normal or reporting companies will submit to the SEC. So there's a lack of information. It's harder to find who holds debt, how much debt is on the books. Even at times will it be hard to see how much revenue, if any, a company is generating. So keep this in mind because when it comes to doing your diligence, some companies that trade on the pink sheets, or even on the OTC for that matter, could have a yield, which is limited information or lack of current information, or they owe money to the reporting agency, or they'll have a stop sign, which they've become very delinquent in their filings. So there's a very large lack of information. So when you're doing your diligence process, keep this in mind. You want the most up-to-date information you can, and when a company doesn't report consistently to the SEC or even to OTC markets, it makes it very difficult to determine if it is, in fact, a good, sound investment or good, sound trade. Number 7, with penny stocks, you want to be leery of promotions. Many times, stock promoters will get paid large sums of money to promote or pump a stock, which could result in increased volume, increased price at times, generally an increase in trading activity. So make sure that if you are seeing penny stock promotions, you're looking at the disclaimer, you're seeing what they got paid, and you're seeing what their track record is. Because if they do have a good track record, many stock promoters end up promoting companies that are real and that are viable companies. But there are the other ones who end up promoting companies that are fake, they have limited financials, they have no revenues, and are just a promotion to inflate price and volume so that others can sell shares. So be aware that this is something that people do. It could be good, it could be bad, depending on the timing of it, but generally speaking, email newsletters, social media promotions, that kind of thing, generally are shorter term, so protect your profits and always keep an eye on that stock. It's not something you necessarily want to look away from when it comes to a known stock promotion. A lot of penny stocks have low volume compared to listed or NASDAQ New York Stock Exchange companies. Typically speaking, If you have a small account, that's not so much of an issue, but if you have a larger account, something above $30,000, $40,000, anywhere north of the day trade $25,000 limit, I would say be aware of the daily volume, because if your trade size is large enough, it could be easy to buy shares, but when it comes time to liquidate, it may be hard to sell them, simply because there's not enough demand to meet the supply that you would be putting back into the market. So keep in mind high volume, low volume, what's the average daily volume, and look at the trend, because if a company consistently trades a moderate amount of volume per day, that's one thing, but if it trades sporadically, one day it trades $1 million, the next day it trades $10,000, you do want to be aware of this. Which leads me to number 5. Keep in mind that when you're opening up your brokerage account, that some brokers don't trade over-the-counter stocks, and many don't even trade penny stocks. Definition-wise, penny stock is anything under $5. Be aware and be questionable. Ask these people, do you trade penny stocks? Are you able to allow your users to trade over-the-counter stocks? Because if they can't, and you want to get into this market, you just wasted a bunch of time opening up an account someplace that won't allow you to trade stocks that have that volatility, that could present that potential to make anywhere from 100 to 1,000% in just a few short days. Number 4, if you look at historical data, a select few, according to this article, do end up becoming large companies. If you look at this company, Concur Technologies, you'll see it was traded as low as 31 cents and saw around $107. So even name brand companies like True Religion and Pier 1 Imports, BJ's Restaurants, even Monster Beverage have seen penny stock levels end up turning into very large share prices in a short amount of time with regard to a few years. So keep this in mind. Long-term investments in penny stocks, though risky, some do have the potential to pay off. Number 3, many penny stocks have an inverse relationship to the market. So, for instance, if the stock market is down in general, many penny stocks could be up, just due to increased volatility, a stock promotion, general awareness around a stock, social chatter, multiple different catalysts, news could spark up many penny stocks to show gains where the market in general, the S&P, the Dow, may be down. Concurrently with that, if you see mining stocks, for instance, gold companies, silver companies, in general that trade on the major exchanges, if they're down, there are junior mining companies on the over-the-counter that are up. So very limited amount of relationship between penny stocks, over-the-counter stocks, and the general stock market, in my experience. Number 2. Penny stocks can show opportunity to grab a significant amount of shares at very low prices, and that could end up presenting a huge opportunity to leverage your small amount of dollars to reap a large gain. In this instance, the stock was trading around 0.001. That's 1/10 of a penny. In just a few months, that stock rose to highs of 3 cents. What does that mean? That means even if you had $100 to buy 100,000 shares at 0.001, that increased to 3 cents. A very small move considering 3 cents is 3 pennies. But that very small move in just a few months, it would have grossed you $3,000 just from a $100 investment in 100,000 shares. So keep this in mind. Penny stocks allow you to leverage your small accounts in order to make large gains. Which leads me to number 1. Penny stocks can show huge potential to grab gigantic gains. And what I mean by that is this. For example, this company ended up having a stock price that traded under $4 a share. In just a few days, once it reached a little under $5 a share, it ended up jumping to over $100 a share. That increase would have seen from under $4 to as high as $102, an increase of over 2,500%. That's 25 times your money. You can easily do the math and see the potential here. So my number 1 top topic for penny stocks is the potential could be huge. Consider the risk, consider the reward, protect your gains, and know what you're getting into when it comes to the OTC markets, the penny stock world, and hopefully this has helped you to build a better base and understanding for penny stocks. Look into some of our other videos, check out some of our tutorials, and always drop us a line when you can. Thanks for watching.